In this presentation, we will set up an account related to equipment and the related opening balance for it. Let's zoom into it with Xero. Here we are in our Get Great Guitars file. We're going to start off by opening up our balance sheet by going to the accounting dropdown and scrolling on down to that balance sheet. When that opens up, we're going to duplicate the tab by going up to the tab up top. We're going to right click on that tab up top and duplicate it. Going to hold down Control, scroll up just a little bit to get up to that 125. That's where I like to be. We're at the December 31st, 2019. Going to be scrolling down. This is what we have thus far. We're going to be adding an asset account now that related to property, plant, and equipment. So these are going to be the depreciable assets that we need to add into the system. So we need to add them here. A couple of other concerns we need to think about with assets, and that's going to be how we're going to depreciate. What about a subschedule and that kind of stuff? So we'll talk a little bit about that. Xero has some nice features related to the property, plant, and equipment. Just depends on how you want to use them. We're then going to go back over and take a look at our beginning balances over here. So if you're having beginning balances from another accounting system, you may have, or you may well have, equipment within them. So we'll have, in this case, the fixed asset where we have the machinery and equipment of the $75,000. So we have the $75,000 in the fixed assets that we need to pull over in some way, shape, or form into our current system. The other side is going to have to go somewhere. It's going to wash out, as we have in the prior sections, into the equity in some way. So we need to pull over this information. Now, this can be a little bit more tricky than this, because note that when we're talking about property, plant, and equipment, we're thinking about those depreciable type of assets. So the question is, how are we tracking the depreciation as well? Many times, small companies and many companies will actually have help with an outside schedule to help track depreciation, possibly with the use from the CPA firm or tax firm at the end of the year. For example, the tax firm, when you do taxes, the depreciation schedules will be different than for tax purposes than book purposes, possibly. So unless you have your books on a tax basis, right? So for that reason, it's kind of useful to have the tax software to help you out with the depreciation. And therefore, many companies may put the cost of the depreciation on the book and possibly do adjusting entries at the end of the period to help with the depreciation and the calculation of it. And that's often done by possibly the tax preparer or the accountant at the end of the year. So really the question then is, I'm going to put the $75,000 on the books. Do I want to group it just as equipment, or do I need to add all the subcategory of the types of equipment that are in there and the depreciation on it and all that detail on it? Or can I simply put the group number of equipment and possibly the group number of accumulated depreciation related to it and depend on other schedules possibly being helped by the accountant or CPA firm to put that other information in? Now, that's what we're going to do. We're going to basically put the grouping number in, the full number in here, not be thinking about the depreciation calculation within Xero, not using Xero for the subcategorization of all of our equipment accounts and for the calculation of the depreciation, because we will be dependent on, we're going to say, the tax preparer for that, using the tax software to do that. If you want to track that information within Xero, there is functionality for you to allow you to basically do that. Those are the things you need to consider here. So we have the $75,000. I'm just going to enter the $75,000 as one lump sum into a category of property, plant, and equipment. If you have the other schedules that you need to pull in for depreciation schedules that you want to do within Xero, you would need that information as well. Also note, just in general, the machinery and equipment's a long-lived asset. So those are the things that we're going to purchase that are going to be the long-lived type of assets. We have to put them on the books as an asset, as opposed to depreciating them at the point in time of purchase, and then we're going to depreciate them over time. It's also useful to note that the fixed assets, it might be called, these types of assets might be called fixed assets. They are in QuickBooks, they're called fixed assets. They might be called property, plant, and equipment. A long name could be shortened to PP&E. Some people might call them depreciable assets. So different terminology and different software, different people will use different terminology. All right, so how would we do this? I'm going to go back over to Xero. Going to go back to the first tab, hold down Control, scroll on back down to that 100% so Xero doesn't do anything funny as we scroll around with it. I want to go to the accounting dropdown, go down to the fixed assets at the bottom. Again, if you're not at 100%, it might do something funny. So if you're not seeing this bottom line item, scroll back down to 100% and then it'll probably be there. So then we're going to go into the fixed asset section. So we're in the fixed assets. And we have, you can watch this little video that'll help you to kind of decide how you're going to be thinking about the fixed assets. Again, you got like two kind of ways you want to think about it. Do you want to track the fixed asset detail outside tax software possibly, or within Xero? Then you can go down here to the start, the startup information. So this is a fresh information. We're going to go down here to start this information up. What's the start date? The start date is the first day in the financial year that you want to start calculating depreciation on your registered fixed assets. You can select the first day of a financial year between the time you started using Xero through the next year. So we're going to pick the start date for January 2020, let's say. Let's go ahead and save that. Once that's going to be set up, you've got your draft information, your registered and sold and disposed of information. And then we have the new asset that we can set up the new asset up top. If we want to import assets from a prior system, if we have a prior schedule that we're going to be importing them from, we can use the import feature here. So let's go ahead and add. So we're going to add the asset. So note, as we add it, we're just going to go through the practice of adding it here, but we're not going to actually track it within the system. And then we're going to just basically enter a journal entry to enter this into the system, tracking this information from a third-party software such as the tax software. We're going to say add button. We're going to name the asset. I'm going to zoom up just a little bit so you can see it. I'm at the 125, and I'm just going to call it equipment. Now, if you wanted to have more detail, like it was a forklift or something like that, then you can add the more detail of all the description. I'm going to put this stuff in there. It's kind of a lump sum. Assume it's going to be then tracked by outside software such as the accounting software or the tax software. The automatic sequence, I'm going to keep the automatic sequence here, so I'll let it populate in terms of the automatic sequence. The purchase date, I'm going to bring it back to 2019, so I'm going to say December 31st, 2019, because we want to enter that beginning balance. The purchase price, I'm just going to put the full amount that is in our fixed assets, which are the $75,000. So I'm going to put the full $75,000 here, $75,000. Warranty, I'm not going to put that. Serial number, if you had a serial number and you're listing each asset, you can do so, but I'm grouping all the assets basically at this lump sum. So the asset type, I'm going to keep blank for now. I'm going to call the description equipment, and then I'm going to beginning balance. And then the depreciation start date, we can keep it there, but I'm not even going to see if I can not put in a depreciation method because I'm not depending on the software to do the depreciation. I would like the depreciation to be done by the tax preparation and then just simply do an adjusting entry for it. If you were to choose a method, you got the straight line, the double declining, 150, and declining 200. So note that again, if you use the tax, if you're doing tax depreciation, it's going to have different depreciation in it. So it's going to have basically double declinings, but makers a half-year convention, and it might have 179 type deductions and special depreciation. So that means that you're going to have a difference between the tax and the book depreciation. So it might be useful to allow your tax software to calculate book and tax depreciation if possible, or you can calculate your book depreciation here and allow your tax the tax preparer at the end of the year to do the tax depreciation. You want to consider how you want to do that. Also, just note that small companies may just be on a tax depreciation basis so that they don't have two sets of books, even though it's not ideal, even though it's not in accordance with generally accepted accounting principles. And so you want to discuss that with your CPA firm to see if that would be what you want to do with regard to depreciation. So I'm going to try to leave this blank right now and see if it allows us to do that. The depreciation start date here, and then it says the accumulated depreciation. Now, if we had an accumulated depreciation amount, we could then put that here. Ours is currently 0. In other words, we haven't depreciated anything at this point in time. All we have is the fixed assets on the books at the $75,000, so I'm going to keep that as is. So then I'm going to go ahead and save it. So that's kind of an intro of how you can enter this information in. Now let's go to the register. I'm going to go to the accounting dropdown, and I'm going to go to the chart of accounts here. So the accounting chart of accounts. We're looking for an asset account. So I'm going to go into the asset account and scroll back down, and we're looking for these fixed asset accounts. Now I'm actually going to enter these with basically adjusting type journal entries. So I'm actually going to just record a journal entry here to enter this into the computer and equipment, and then record the depreciation as an adjusting entry, which is often a typical format of doing this. So let's go into here. We're going to have to do that with basically a journal entry. So we're going to need a journal entry again. So if you don't have another tab open, right click on a tab and let's open or duplicate another tab so that we can put our journal entry in it. So I'm going to go to the accounting up top. We're going to then go down to our reports so that we can enter a journal entry. We're going to go down to the accounting section within the reports, and we want to go to the journal. So I want to go to the journal report, and then we have our option for the journal entry in here, which is to add a new journal. So I'd like to add a new journal, please. And then we recommend that you only, your accountant or bookkeeper, so only your accountant or bookkeeper does the journals. We should use forms for most things, but this is the beginning balance. So this is going to be fixed asset beginning balance. And then we're going to say this is going to be as of the end of December, like of 2019. And then if we go back down below, we're going to say the description pulls down for us, which is nice. I like that feature. And this is going to go into that account that we said was the fixed asset account, which is called Computer and Office. Computer and Office, and that's going to be the debit of $75,000. Credit then, I'm going to put right to the equity section. So right to equity, everything's going to wash off in equity. So retained earnings is our major account there, and that's going to be the credit of the $75,000. So that's going to be our journal entry to put that beginning balance on the books, and we're just going to do this with journal entries. So I'm going to go ahead and post that. Now let's go back over to our balance sheet and see if it has populated. Let's go ahead and update the balance sheet. Also note, if you don't like the name of the account that they put on the books, if you don't want to call it computer and office equipment, and you just want to call it equipment or something like that, or you want to list out car and truck or something like that, then you can simply adjust the name of it or add another account, but just make sure the account is a fixed asset type of account. In other words, if I go back over here, and in our chart of accounts, just make sure when you set up a new account, it's going to be a fixed assets type of account, or you can simply modify the name of the current account. You might want a few different fixed assets like a building, equipment, or something like that, and group a few of them in there, the common types of fixed asset accounts. Back over, we see our fixed asset. There it is. It's on the books at the $75,000. If we were to go into it, we put it on the books at the $75,000. And there is our journal entry. It's on the books as a manual journal in the source document. So if I was to click on that, it would go to that journal entry window. Going back to the forms, the other side is going to be down in the retained earnings. Going down to the retained earnings, the other side will be here. It's not in the income statement. Income statement will be blank. This amount will roll over to retained earnings in 2020 as we want it to do. Now, also note that once again, I didn't enter this information. If I go back over here to the accounting, scroll back down to 100 so it doesn't do anything funny, select accounting, go to the fixed assets. We just showed this amount as the demo. If you wanted to track this information in more detail within Xero. But just realize you want to talk to your accountant to see whether or not you want to just do adjusting entries and track the information in a tax software or something like that. Very common to do for small businesses typically, or mid-sized businesses. And then at what point do you want to vary from that? So we're just showing you can do this more detailed tracking within the system. Your question is whether you want to do that or not. If you're a small company, your question is, do you want to be on a tax basis? Because it would be easier without having two schedules, but it's not perfect for generally accepted accounting principles to do so. Or do you want to be on a book basis, which means you're going to have a book basis, and the tax basis will differ, making the tax preparation and process a little bit more difficult, but it would make your books more correct according to like accrual or generally accepted accounting principles. And if you do a bookkeeping process, do you want to allow the tax software to do both the bookkeeping tax depreciation and the tax depreciation and simply give you adjusting journal entries periodically, monthly or yearly? Or do you want to try to track that information in your accounting system? Say, hey, I'm going to handle the book depreciation in this accounting system, and then let the tax preparer do any adjustments they need to adjust it to tax depreciation at the end of the year. So just a couple things you want to just kind of go over with. Hopefully you have the accountant or tax preparer at the end of the year that can help you out with the decision-making process in terms of how you're going to track depreciation. Also note that when you purchase and sell equipment, depreciation, accumulated depreciation is involved. So that's another area you might be working with your accountant anytime you do a purchase or sale of equipment. It doesn't happen like all the time. You don't buy forklifts all the time. So it's a periodic transaction. So you may want to ask for guidance just on those periodic transactions in terms of what would be the best practice with regards to recording the purchase and disposal of the equipment.